Namaskar dosto, welcome back to Dhwaj Talk Info. Today we are going to discuss one important subject in our episode 19. How to identify India's next bull run sector. The complete sector rotation framework. Live screener.in demonstration. In 2025, the metal sector gave investors 29% returns. Auto sector gave 23% sector, banking gave 17%, and these were the biggest winners. Everyone was buying metals and auto. In 2026 so far, the same three sectors are down 7 to 8%. The sectors that were laggards in 2025, energy and metals, are now leading. And the IT sector, which fell 12% in 2025, is now recovering. The same sectors do not lead the consecutive years. It is called sector rotation, and the investors who understand the sector rotation identify the leaders before the big move, not after the news headlines tells everyone. In the next 15 minutes, I'll show you the complete sector rotation framework, including a live demonstration on screener.in and a deep dive into the emerging theme that YouTube identified specially for the Indian investors right now. The rural consumption and why the next nifty bull run could be led by the sector most investors are currently ignoring. In the next section, we'll discuss the 4 types of sectors. Know before you invest. Every sector in India falls into the one of the 4 types. Understanding which type of the sector belongs to tells you exactly when in the economic cycle it will outperform. Type 1, cyclical sectors. Performance rises and falls with the economic cycle. Metal, cement, auto, real estate. When GDP grows strongly, these sectors soar. When economy slows, these sectors fall hard. In 2025, GDP grows strongly. Metals gave 29%. In 2026, with slowing growth and rising input costs, metals still lead, but momentum is fading. Then the type 2, defensive sectors, relatively stable regardless of the economic conditions. FMCG, pharma, healthcare utilities. People buy toothpaste and medicines in every economic environment. These sectors protect capital during the downtrends. They typically underperform in strong bull markets. The type 3 is growth sectors driven by the long-term structural trends, not just the economic cycles. IT, specifically chemicals, new energy, consumer discretionary. These compound over decades. In India, IT sector was 20 years structural story. The digital economy secular growth story. Then the type 4, interest rate sensitive sectors, banking, NBFC, real estate, infrastructure. These sectors benefit when the rates fall. In 2026, with RBI holding rates at 5.25%, these sectors face headwinds. When rates eventually fall, these sectors typically lead the next rally. Now, coming up, the live screener.in sector analysis demonstration plus a deep dive into the rural consumption theme that could lead India's next major bull run. Watch how to filter quality companies with any sector in under 5 minutes. Section 3, live screener.in sector demonstration. Open screener.in stock screener show sector filtering live practical session. Now I am going to show you exactly how to analyze sectors live in screener.in. This is the same process I have been using for the 30 years. Now available free for every Indian sector. Open screener.in. Click on the stock screener button at the top. You will see the filter box. I am going to add industry filter now. Screener.in uses the industry drop down and classify companies by sector. Let me show you IT sector first and the rural consumption or FMCG later. Now I will show you the live screener.in demo rural consumption, the emerging bull run sector. Type screener.in in Google browser. This screener.in desktop appears. Click on the screens. Then on the right side there are various sectors. Go down. We will select first IT software. Click on the IT software. These IT companies will be listed as per the columns. Now if you want any more columns, you can add or delete accordingly. Here I have clicked some columns. If you want any more columns, you can add. You can click here. You can click here and add anything, any column you want. Say I don't want market capitalization. I will deselect that one, and finally save. You click on the save columns to keep all those columns for you. Next is the next step. Click on the sales revenue column. It will be arranged in a descending order, and you can make note of all these companies for further investigation. You can export and make save it also. Then next step, CF operation, cash flow operations, highest cash flow operations. It will be sorted in a descending order as per the criteria. Then cash flow operations for 3 years, positive cash flow operations for 3 years. Click on this. Again, the companies will be sorted as per their highest to lowest descending order. It is there. Then the 5 years return, which is giving a highest returns in the last 5 years. If you click on that, it will be sorted as per the highest returns to lowest return descending order. It is there. Like this, you have to see, make note of it, and do further investigation before you buy any company. And this is about the IT software. Then I show how to do that FMCG sector. Then again click here, screener.in, desktop will come. Same, go to screens. On the right side you can see the sectors. Then here click on the diversified FMCG. Same columns will appear, and do the investigation as I told you earlier. Sales variance, CF operations, and CF 3 years and 5 years return, etc. Everything you can see here. It has been arranged, and you click, it will resort accordingly, and you can make note of it and do further investigation. That is about the screener in that app. Now the section number 4, rural consumption, the next bull run story. This is the YouTube recommended content delivered with genuine conviction and the market insight. Why the rural consumption, the theme YouTube identified especially for the Indian investors right now? Because the conditions for the rural demand revival are forming simultaneously. Now, condition number 1, monsoon. India receives above normal monsoon rainfall in 2025. The kharif crop output was strong. Farmers earned more. They are spending more. Then the condition number 2, MSP, minimum support price hike. The government raised the minimum support price for the kharif crops. More money in the farmer hands means more demand for FMCG products, soaps, oils, biscuits, cloths. Then the condition number 3, inflation is falling. Consumer inflation fell to near 2%. When inflation falls, the purchasing power of the same income rises and demand increases. Then the condition 4, rural wage growth. MGN Rega wages and the private sector rural wages are rising. Condition number 5, government spending on the rural infrastructure, roads, housing, electricity, connectivity. Then these 5 conditions together created a rural consumption boom in 2003 to 2008. It created the rural consumption boom in 2014 to 16 also, and the analysts of the HSBC and IFIL are projecting it will create mid-teen earning growth in financial year 27. The rural consumption bull run, if it materializes, will be led by the FMCG agricultural companies, the two-wheeler manufacturers, and affordable housing companies. These investors who identified the quality companies on Skinner.in before the move will benefit most. Then the rural consumption watch list framework, screenshot days, subsector FMCG, soaps, oils, biscuit. Why it benefits? Direct rural demands, staples bought daily. What to check in the Skinner.in? Revenue growth accelerating for the last 2 quarters, plus ROC about 25%. Key screener filter revenue growth greater than 3 years 10%, and ROC greater than 25%. Then the next subsector, two-wheelers, entry autos. Why it benefits? First, the vehicle purchase, rising rural income. What to check in the Skinner.in? Volume growth plus margin expansion plus PE below 5 years median. Key screen filter, revenue growth greater than 15% and PE below the median. Then the next subsector, agriculture input, seeds and fertilizers. Why it benefits? Direct farm products, productivity play. What to check in the Skinner.in? OCF positive, not just seasonal revenue, low DE. Key screener filter, OCF positive and DE lesser than 0.5, you have to check always. Then the next subsector is affordable housing or microfinance. Why it benefits rural housing and credit demanding rising. What to check here in the screener.in is NPA level falling plus ROCE above 15% consistently. Screener.filter ROCE greater than 15% and revenue greater than 15%. Then in the next section we'll see the 3-step sector analysis process, the most actionable section, the repeatable framework. Here is the 3-step process to analyze any sector in India. Step number 1, identify the sector type and economic cycle position. Is this sector cyclical, defensive or growth rate sensitive? Where are we in the economic cycle? GDP slowing or accelerating, or interest rising, falling or rising? Step number 2, apply quality filters in screener.in within the sector. Revenue growth above the sector benchmark, ROCE above 20%, DE below 0.5 and OCF should be positive always. These are the companies that lead the sector, not just participate in it. Then the step 3, valuation check. Is the sector currently cheap, relative or history? Then open the Nifty sectoral index chart, compare current PE to 5 years average PE. A quality sector at below average PE is the single most powerful entry signal in the equity investing. IT in early 2026 was trading below its 5 years median PE after falling 12% in 2025. Quality companies at depressed valuation plus structural growth story intact is equal to the opportunity. Rural consumption at current valuations with 5 simultaneous tailwinds forming is equal to the next opportunity always. Then in the section 6, what triggers the sector leadership changes? The sophisticated investor insight, most unique content in the episode here. The most common question I get from the investors is, how do you know when the sector is about to lead? For signals tell you a sector leadership change is coming. Four signals tell you the sector leadership change is coming. The signal number 1, the catalyst event. For rural consumption, it is monsoon plus MSP plus rural income rising. All are happening now. For IT sector 2026, it was the AI spending revival from US clients and the rupee weakness making Indian IT cheaper. Signal number 2, earning revision. Analysts upgrading their earnings forecast for the sector. When the sector earnings estimates go from neutral to the positive, institutions buying flow follows. Then the signal number 3, valuation below 5 years median. As we discussed, quality at a discount. Signal 4, the first mover stocks breaking out. 1 or 2 quality companies in the sector start showing exceptional result. They break above the resistance on the chart, trading volume surge. These are the canaries and the early signals that the sector story is becoming real. When all the signals align, the sector leadership change has begun. That is when the screener.in watch list within the sector build patiently pay off. Then in the next section, your sector analysis action plan. Inspiring close, the most empowering section plan in the series. Your action plan today. Step number 1. Open screener.in, stock screener, add industry filter, select rural consumption or FMCG as I shown you earlier, add revenue growth 3 years above 10%, ROC above 25% and DE below 0.5% and OCF should be positive. Note the quality companies that appear. Step 2, check current sector PE versus 5-year median PE. For FMCG, is the sector PE below its 5 years median right now? Step number 3, look the companies in the rural consumption watch list where the PE is below their own 5 years median. Quality company plus depressed sector valuation plus 5 tailwinds forming is equal to your investigation priority. Then in the step 4, run the full 10-step analysis from the episode 15 on your top 3 candidates. Step number 5, add qualifying companies to your watch list from episode 7. Set buy zones alerts, and the rural consumption story will not move in one day. It will build over 12 to 18 months as the tailwinds strengthen. The investors who build their watch list today before the move will have the conviction to buy when the prices come to their zone. Comment below which rural consumption company you have screener.in filter and follow, because the episode 20 is coming and it will take you one step further. Please subscribe, like and share with the family and friends, and please support me to bring more such good contents for you. and thanks for watching.